So as we move into a time of the year when real estate activity should be going down, why is it actually going up? And what does that mean for us as we come to the end of 2021 and head into 2022? Hi, this is Andrew with the Andrew Smith team at eXp Realty. And I guess it really should be no surprise. I mean, not much this year has been a surprise, has it? Um, the real estate market's been on fire, as we all know. It's been absolutely insane, absolutely crazy. And here we are late fall. We're in the middle of December. And at a time of the year when the activity should be declining, everyone's attention starts turning towards the holidays, wrapping things up towards the end of the year. Housing isn't usually front and center on most people's minds. But here in 2021, we're actually seeing activity pick up as the year comes to a close. We can see that in several different reports. I've noticed it in the local markets here in North Texas, Frisco, and also in Southern California and Phoenix that we track pretty closely. And it's been a strange phenomenon, to be honest with you. Buyer calls have actually increased. People ready to buy that haven't been able to. Some of that probably has to do with the fact that interest rates ticked up a little bit, although they did settle slightly. But as interest rates started to tick up, that may have caused some people to decide that they don't want to wait and that they're going to go ahead and try and get into that home that they've been waiting on. So let me go ahead and share my screen with you, and I'm going to go through a few things to help point this out. So this first slide that we're looking at here is put out by a company called Showing Time. And Showing Time is an appointment service that tracks activity across homes for sale all across the country. And here's the interesting thing. What the actual numbers on this slide are, to be honest with you, don't really make a whole lot of difference to you. Just know that the higher the number, the more activity that we're actually seeing. And here we are currently, this is as of October of this year when this came out, at a reading of 183.7. This goes all the way back to January 2020. And you can see that that reading compared to many of the months is quite a ways up there. Okay, not as high as we saw in the first part of this year, but still pretty high. But here's what I'd like to point out. It actually has just eclipsed what we saw in October of 2020. And the reason I bring that up and the reason that that's important is 2020 was a really strange year. And we got hit with the pandemic. Activity in the spring, when it's normally really busy, just evaporated. There wasn't any. Spring got pushed out into summer. The summer activity got pushed into fall. And as many of you might recall, it was incredibly busy in the real estate markets. So the fact that this year, in falling inventory conditions, we've actually eclipsed the activity that we saw last October is pretty remarkable, to say the least. And it's that inventory which we really need to focus on, as it's telling us what's going on with pricing. That's been front and center at everybody's mind. Homes are just so expensive, and the price of homes keeps climbing and climbing and climbing. And when is it going to end? I will say that the pace of appreciation is starting to come down. We've been seeing that. We've been talking about it for quite a while, and we are starting to see it. Obviously, it couldn't just keep continuing at the pace that it was on, and that is starting to settle down. But pricing is a direct result or directly impacted by the imbalance between supply and demand. We're seeing it across the broader economy right now with inflation. That's kind of a wild card that we're going to have to see how that plays out. And inflation could very well have an impact on where home prices go, as if people are having to spend more money to buy groceries and necessities, there's less monthly money available to spend on housing, which could put a little bit of downward pressure on price appreciation. I'm not sure yet it's going to put downward pressure on pricing, at least not in every market, but it could put downward pressure on the pace of appreciation. So take a look at this with regards to the listings. Monthly listing counts. Okay, these lines right here represent the years 2017, 18, and 19. And this is a fairly typical pattern that we see. We start the year over here in January, and you can see that listings climb until they reach a peak right at the end of May, June, right in there. And then the number of listings continues to fall. And then there's a spike right after the holidays into January, which towards the end of January is what's being reported here. Now, this orange line is 2020, and you can see that we were following a pretty standard pattern. This represents the pandemic, the lockdowns, the shutdowns that took place. Inventory plummeted. Nothing was going on. Makes sense, right? Well, we never really recovered. Even though the inventory started going back up as things started to, ease up a little bit, it never reached the level that we had, and then kind of plateaued out all the way through the summer into October before falling. Okay, well, when we add 2021 into this, look at this. We actually started 2021 with substantially fewer homes for sale than what we had seen in any of the past years. Demand was increasing, but the number of homes for sale wasn't. Although the listing inventory did increase and eventually surpassed 2020 levels, it fell below them by September and continues to fall now. So why is that? And we've touched on it before, right? We've got the builders were lagging behind in the number of new homes that were being built, right? So the number of homes that were needed to satisfy demand hadn't been built. But that doesn't explain all of this gap. Well, some of the newest information that's come to light I've just read is really, really interesting. And this affects more the lower end of the market, your first-time buyer homes, your starter homes, which are what were needed in most areas of the country and what we've been lacking in. As home prices in 2020 kind of took off, the buyers that were moving up, so somebody goes from an apartment, excuse me, or a condo, they buy their first home, start having families growing, have a child or have a second child, and they need more space. Traditionally, that home is sold and they move up to the next home. Well, what we've been seeing and what some of the reports are now indicating is that some of this decline in inventory is due to the fact that those homes aren't being sold. Those people that own those homes are keeping them. They're turning them into rental properties. They built up quite a bit of equity. So instead, they've been pulling equity out of those homes and using that as a down payment towards their next home. I mean, it makes complete sense. Mortgage interest rates have been so incredibly low. They're able to rent out their existing home, take advantage of the equity buildup that's been there, and move into a new home. That has helped starve the market of some of the inventory that it typically needs. And it doesn't look as though that's going to change anytime soon. The latest projections I'm seeing is that this inventory number is going to continue to fall. And we're going to start 2022 with even less inventory than we started 2021. It's hard to imagine there being fewer homes for sale, but that's the way it's looking right now. And as a result of that, all those leading indicators as far as what we can expect as we move into 2022, unfortunately, appears to be much of the same. And I say unfortunately because if you're one of those people that have been sitting on the sidelines or decided to wait, the beginning of 2022 doesn't look as though it's going to be any better. It looks as though, even though there might not be quite as many multiple offers, as we will see some of that start to wane because the builders are starting to have more inventory. They're starting to build more or put more inventory onto the market. It still doesn't look as though things are going to return to anything close to what we would consider normal for quite a while. As a matter of fact, the home price expectation survey has recently been updated. And that survey right here is showing that they're now projecting that home prices are going to continue to increase all the way into the beginning of 2026, albeit as a much more slower pace, more modified pace of appreciation, which is what we've been expecting and talking about for a while now. So let me just explain what this actually means. This is showing that if you looked at a median price home, or if you would have bought a median price home in January of 2021 for 350,000, it's projected based upon the pace of appreciation that's being forecast. That home will be worth $461,285 by January of 2026. That's a gain of $111,000 in equity. So again, for anyone that's been sitting on the sidelines, this is the type of equity that you're looking at potentially gaining over the next 5 years. And that's based on the median priced home. And we don't see anything around those median priced homes much in the markets where me and my team work. Okay, so that's just something to keep in mind. Again, there's no crystal ball. I'm not saying this is exactly what's going to happen, and nobody else is either. These are just the latest projections based upon all of the information that we have now. In addition, we've also got the mortgage rate projections have just been updated as well. And again, if you've seen any of the videos I put out recently, you'll know that by the end of next year, they were forecasting right around 3.5%. Those have been revised up, right? They're now looking at 3.55 to 3.7%. Again, could this be impacted by the inflation numbers? Yes. In order to combat inflation, the Fed's probably going to have to change their monetary policy. As they do that and possibly raise interest rates, that may not necessarily allow the mortgage rate to adjust quite as much as they were predicting, but we'll have to wait and see. So as of right now, we're looking at a increasing mortgage rate environment with a continuing price appreciation environment. So again, what's the best thing for you to do? Whatever's best for your situation. I'm not trying to say one way or another, but I just want to share the latest information I receive so that you can make that best decision for you. Now, lastly here, I just want to share with you this information that kind of goes back to the increasing of buyer demand. This right here is just a screenshot of a market report for Frisco, Texas, where I'm actually talking from right now today. And this is accurate as of today. This is being recorded December 13th. Okay, so this right here is what I want to draw your attention to. It's known as the Market Action Index. Think of this as a speedometer, right? The further to the right the needle is, the faster the market's moving, meaning the more of a seller's market it is. The conditions are more in favor of a seller. Anytime this reading is over 30, conditions favor sellers. Now, the interesting thing about this is this index has gone up over last month. Last month, the index was an 81. This month, the index is an 85, showing that demand is increasing and the market's actually heating up a little bit. To put this in perspective, the national average right now is 58. 58 is still a strong seller's market, but nowhere near what we're experiencing here in Frisco, Texas. If you'd like to check the market specific to your area, your zip code, you can do that. I've put a link to this actual report in the description of this video below. And if you're to go to that report, you can enter in any city or zip code in the country right here and get this exact same data for that market of your choosing. And over here, just to point out, as we were talking about with regards to inventory, right here, the inventory currently in Frisco, as of last Friday, was only 90 active listings. For a city the size of Frisco, that's virtually no homes for sale at all. There's nothing out there. In fact, buyers that we've been working with just in the last couple of weeks, homes priced in the mid 600s are getting listed and getting multiple offers within 24 hours. Those are still the conditions that we're seeing here in late December, which is pretty crazy when you think about it. So again, hopefully this information helps. gives you a little bit of an update on what's going on in the market. It's still incredibly strong. Overall, it looks as though 2022 is setting up to be a repeat of 2021, with the exception that we're not expecting home prices to increase as quickly as they were. Now, I am seeing builders here locally have more inventory become available. I'm getting notifications myself of some homes that are going to be ready for move-in that are not under contract. They'll be ready within the next 2 to 3 months. We haven't seen that for most of the year. And again, as that happens, you'll start to see the multiple offers and the bidding wars taper off just a little bit. But again, if you have any questions or a specific situation you'd like to discuss in more detail, please don't hesitate to reach out. I'm always happy to talk to you. You can reach me at 888-447-9650.